Welcome back, chumps. We are currently sitting at 10:34. So about a half hour after I opened the trade, a little less time than that. And so far we're $30 in the money in terms of this Iron Condor. And so I wanted to sort of take this moment in terms of kind of showing the what is going on and why we are profiting in this situation. And as I mentioned before, the SPX is pretty much range trading right now, right? It's grinding sideways. And that's kind of how I anticipated the position would work. So what is going on is that the theta behind this entire position is $422.79. You can look at that as a dollar value. Theta is a options Greek that measures the rate of decay for an options position. This is the total theta, and this is the theta per position. And since the Iron Condor is kind of an amalgamation of having two verticals kind of stacked against each other, it pushes that profit target into the center zone, right? So it's basically like a strangle, but with defined risks at the end. And what that does, it means that, remember, if an option expires or ends, right, with out of the money, it makes the option itself worthless. And so what did we do before when we put on this position? We basically put on, we sold a 560 put, which is right here in terms of the profit zone, and 560 is down here, or even off the charts and off the radar. Let's look at a 5-minute candle, see if we can get some more space. It's off the Richter scale right here in terms of where that range is. And then we also have we sold a 580 call, okay? A 580 call up here, also outside of the ranges of where I put my two alarms over here. This little tight area that the SPX is consolidating in. And because of that, as time goes on, this right here is decaying for the buyer. So remember, we sold these two positions. We sold a put and we sold a call. And as time goes on, it's more and more likely for the buyer to never see that 580 call or above, or that put, that 560 put or below. And this is where the money is ultimately made. The reason why we have bought calls and bought puts is to define the risk in the event that it does push out past our break-even points, and we're paying for these options. We're paying the cost of 142, and we're paying for that 241, so it would look like this by itself, just in case it were to somehow explode out of the range. So when you combine the whole position together, it looks like this, where we have a profit zone, a break even, and then a defined risk territory if it were to just go to infinity and beyond on either end of the spectrum. And that's why the Iron Condor is very specifically a tight, neutral, no movement, range bound kind of trade. And the only thing that basically makes you money in this particular process is not the stock moving up or down in any direction, but just sitting there and wasting time, decaying. And with a decay rate per day of $417.78, that's what we're banking off of. If you split this up in 24 hours, then basically that's kind of how you calculate how much you're going to make per hour. So let's fire that up. 417 divided by 24. So $17 an hour is basically what I'm making with this one position here. I could have stacked on multiple positions, but simultaneously I just wanted to go easy for the first one and then just kind of go from there. And ultimately, this is actually quite nice that we are moving in this direction. So, yep. Yeah, so we're gonna sort of pause the video and then move on to another milestone, which will be at noontime. All right, team. Quick updates. 11:43. We are trending lower on the range in which we are established for ourselves with this yellow line right here. And so I wanted to just sort of highlight and focus. We are now on a trend lower. So as we are noticing the trend and we are observing the trend, I think it's about time to sort of cash in the chips, close the positions for the profits that we have. I did layer on a second position onto this particular account. On the Chump Change Trader account, we have this position here. I totally mistook the original position for this account, so unfortunately the profitability will be less than the other account, but that's okay. So once we sort of confirm that the trend is going to hit lower than this yellow line, that's basically when I'm going to close the trade. It's important to not sort of lose your gumption and exit out of the trade too early, because as I said before, even if we bounce off of this support level right here and just even grind sideways as a result, time will continue to go on, as you know, there are less hours in the day, and it will effectively allow us to collect more theta even if we were to still officially break past this level as well. So I'm just going to keep monitoring this level. If it breaks through, we close the positions, collect the profits, and reopen the positions with now a more downside, protection / downside sort of angle of attack. And I can show sort of how that looks like. It's basically like a offset or broken wing Iron Condor. But for the most part, it's looking good. All the accounts that have this position on is collecting some decent premium. And yeah, we'll just sort of sit tight, wait, and if anything changes by noontime, then I will go ahead and close those trades, reopen them, and that's pretty much it. Boom, just like magic. It is 12:06 and we are currently still within the range. It actually moved up in the middle again. So yes, we are sort of grinding for the past, like, I'd say hour or so. The trend had moved down, but once it hit that support level, it bounced right back up. So we expect to just sort of see the same type of action throughout the entire day. And yeah, the more boring it is, the better for us in this particular kind of trade. I don't think that I will actually make any modifications to the trade, other than maybe layering on a couple of extra positions for certain accounts. But for the most part, the small account challenge, small account challenge is doing pretty well with $100 made at 24%. Once we reach about 50%, we can probably just take profit there. There's no real reason to just sort of increase the risk profile from there. But who knows, if it just seems like it really just won't move at all and just sort of stays pinned, I can just leave the position in and just collect the full $415, which is not bad for a start considering it's day one. Yeah, I don't foresee sort of many types of trades that most people do that just sort of is a set it and forget it and check on it every now and then kind of trade that allows you to do some of that. But again, the conditions right now are pretty optimal for it, where we're in a really low news catalyst and sort of like indecisive kind of situation with the market. Granted that for the most part, most market conditions are typically like in this kind of like range based type of environment. So this particular kind of trade can be done multiple times throughout the entire trading year. And I would say unless we're having a bullish or a bearish move, these are the types of positions that really fill the account pretty well when it comes to trying to collect some sort of premium while you are waiting for some sort of swing trade opportunity. So it's not bad. It's not bad at all. Yep, I'll check in within an hour, and by the time we get closer to power hour, we'll sort of see if there's any kind of extra movement in the market when the volume starts to pick up. Because volume right now is relatively muted. There is no volume you can track on the SPX, but let's take a look at the SPY. The SPY is pretty much the same equivalent right here. And as you can see, market opens, volume is pretty much, spiked. Let's look at a 5-minute candle. Market opens, volume spikes, and then it just sort of teeter-totters, and as we teeter-totter, we get down, and the movements become less exaggerated because the volume is just not there. The RSI is reflecting that as well, so that's confluence there, and as well as the MACD. The MACD is actually kind of just shooting under right here, so that's where we get this, more lower grind towards the bottom. So that indicates to me that if I were to probably be on the safer side, I would close these positions and reopen them with more protection and more space for a downside move, just because that's where the trend is heading right now, or at least it was. And it's sort of looking like it's picking back up just a little bit right here. So at the end of the day, it gives you sort of like a window or a pause to just sort of recalibrate, especially during the midday, because this is probably the last time you'll ever put a 0 DTE trade in, primarily because there will be like no extrinsic value left to squeeze out of any of these options because the time is ticking. And again, if I were to show sort of how much, the difference between where we bought the position, which was actually around 10:30 to almost 11 o'clock here, and it was a lot higher during the morning session, which was like 9:30 to 10. We're only at $300. But remember, the risk right here is about $500. Earlier when I showed in the previous video, it was a 1-to-1, right? Close to it. It was like about almost $500 in terms of value to $500 worth of risk, 1-to-1. But the more time you let by, the risk profile still exists here if I were to try to add on another trade, but the amount of gains would be less. It would be $100 less, actually, 23%. So a 24% decay in the same position with only an hour's time passing, that's quite a bit. And that's the idea behind a 0 DTE trade using an Iron Condor, using any kind of premium selling strategy, is that you have time on your side and the buyer does not. And that's what we're here for. We're here to basically crush people's dreams. So we'll check in about an hour and then I'll see you then. Hey team, finally just sort of have an update because I was alerted via one of my alerts that I had put on for the bottom of the range. It broke out from there. It just kept going, so I just locked in a $45 profit, and now it's starting to capitulate or to just sort of gather in this area, potentially dead cat bounce. So I'm just going to close the positions on the other ones and just kind of lock in the profit and move on from there, because we don't want incur any more risk, and that's exactly what I was trying to avoid. So hopefully we're able to close these for a profit and then just go ahead and do that. Oopsies, that's the opposite direction we need. We want to go there. There we go, locked in that profit, and so on and so forth. So that's the end of that position. I will probably go ahead and consider whether or not, as I monitor this, to think that it's still going to be range bound or just, as we've noticed, trend lower. So I might just go ahead and set up a new trade for the midday on a downward downward movement, but still be able to benefit from a range trade. So I'll catch you in a bit. All right, so with that out of the way, locked in $45 worth of profit for the day. We're looking at now trying to see what we can do to make use of the remaining sort of liquidity that's out in this zero DTE. So we have clearly an established lower low trend line here. Let's do a 10-minute candle. This will kind of give us sort of like a maybe 5 minutes better. A 5-minute candle look in terms of the direction that we're going. So let's do a channel, and then let's go from the top of 1025 to here, and then let's hit the top of that right there. This is our channel. It's basically grinding lower. Right now we're pushing up higher. It's gonna be mounting up in this direction right here, and I believe once it hits that blue line right here, the 50 moving average, it'll bounce again, because it has consistently tried to reach that 50 moving average, and then it just kept rejecting after that point. So we're inside the middle of this new range, right? So no longer these yellow lines as a parallel line for price levels being kind of our indicator, but this is showing our trend. So if we want a slight advantage of making sure that we capture some of that downward movement in our price action, we're just basically going to make sure that we set the values, what we're looking for, to reflect that. So what we're going to do is we're going to do what's called a broken wing butterfly, where we're not making, broken wing Iron Condor, we're not making the actual movement in a symmetrical way. We're going to do it kind of like in an offset way. So before we had a 560 price tag, I'm actually going to go lower to 555, and then we're going to buy the immediate, or at least the closer $5 wide 550 put. Then we're going to sell the 575 call, and then we're going to stretch out to probably 10 wide, no, 15 wide. In this case, we'll do 20 wide call, since we think that the market wants to trend or push lower. Sellers wants to push lowers in this market, and that's sort of the winning battle. We're going to try to give ourselves an upside advantage when it goes lower. So not only do we have a lower price tag going lower, but we're also going to make it so that we're profitable even if it infinitely goes lower. So what I'm going to do is actually scale this back right here. See if I can manipulate that so that it cuts down lower. Doesn't seem like that is working. Do I have to go even further out? I'm only going to do that by $5. How is that going to help? Seems like we can't. So yeah, there's no way we can create a situation where we're infinitely profitable if it were to just simply drop. But we did mitigate the risk to the downside to less than 1-to-1, and giving ourselves a huge amount of space right here in case it does move down really low, because we're at the 555 price tag. What if I moved it to the 560 again? Would that help? It helps some, but not in an infinitely better way. So let's try to manipulate this just the way that we were doing it before. Or what we can do is do an iron fly instead. So off a broken wing iron fly, or broken wing, let's see. Where's that call? And where's that put? There's a bot. Oh, there's 2 bot calls for some reason. So right here, we'll buy this one, and then we'll buy this one. So now the wings are tighter on the bottom end, and yes, this is what we want. And then it is wider on the outside end. So this is going to create more upside risk, but I'll make sure I'll manage that. But at the same token, on the downside risk, I infinitely benefit from the idea that we will essentially move lower. So if I can maybe stretch that out, see if I'll still get, no profitability there. So I gotta make it nice and tight. What if I do it this way? Okay, so I still get some money there, and then if it moves up on me, I can make more money on an upside move, like almost profiting on an upset. But I want to reduce that risk as much as possible. There you go. So a potential $500 profit to a $900 risk with infinite $100 downside protection. I think I can live with that. So with $900 of buying power for the next 3 hour, 4 hour, 3.5 hours or so, this is what we got to work with. So the range for the top is still here. So we don't foresee per se, we have less likelihood because of the trend, right? This trend channel, less likelihood that it would hit that top channel. So therefore, I'm going to give myself the maximum upside protection in an upset, right? So in that smaller window that it would go down, go up at these levels, I'll get more profitability. But simultaneously, I've also locked in $90 of pure profit, even if the SPX explodes in the next, or implodes in the next 3.5 hours. So this is sort of how I'm rearranging my risk profile there. And of course, still going to monitor it hour to hour and still set alerts for myself so that if we were to trend anywhere different than where we are right now currently, I will have the opportunity to adjust. And again, I will be collecting theta this entire time. It's already $27 in the profit margin, and I just released this position. So it's not too shabby of a sort of a risk to reward profile, in the sense that time is just melting, and as we get closer and closer to the expiration, the speed in which that sort of decay is going to rapidly come in real quick. So yeah, especially when it comes to this little hump right here. This is the last thing to just sort of actualize. Let's go down to here. So you see this is set to today's date, and as time goes on, this dotted line is the current profitability or projected estimated profitability, even though we are already well exceeding that. And as time goes on, this dotted line, just as you've seen it, just outlines this entire solid green line, which is the expiration profitability at the given price point. So if the stock moves at the upper range right here, I'm going to make potentially almost $500. But if it stays anywhere down here, in this range or lower, then I'm just going to make $90 for the remainder of the day, which is not a bad thing at all, considering that the market is wanting to move lower. See how my trend line is setting off the trigger, and it's going to move lower. So if we're moving lower, and that is a guaranteed profitability on this particular point in time, that's totally fine. If there's an upset and it moves back into the range, right, where it chops sideways, like my original thesis for the day, then that's great. That means I basically 5x'd my initial, actually 10x my initial gains, and that's just a day's worth of trading. Now, granted, when you do normal options trading with 30 to 45 days, you're going to see this kind of management happen at the 21 to 20-ish day mark. Why? Is because the first half of the decay is all the extrinsic value. Now we're just dealing with absolute values or intrinsic values. And here's the extrinsic and the intrinsic right here. And you can see that there's a bunch of extrinsic value left in these particular options. This one, not so much. And then that's why you see the intrinsic value mark as 0, and as well as this one is right here. So intrinsically, it means that there's nothing of value at this particular moment in time because the stock price is not making it of any value. But when you look at, let's say, let's look at that one again. So there's nothing intrinsically valuable about the short call right here, primarily because all of this value is extrinsic, and that's is what we're looking for. That's actually the main juice or the main profitable portion of the trade, is that extrinsic value is hype, is the anticipation of some sort of worth, whereas intrinsic value right here and right here for both this long put and this short put right here, intrinsically there is value here because each of these things are already in the money for the buyer, at least. So we're just here to just counteract that, but we'll keep checking in as long as we sort of stay in this range. And yeah, it looks like it's just going to keep blowing past that range and trend lower, and that's great. I collect my $90 and I gave myself a little safety net, a little bonus if, let's say, the market wants to try to revenge trade and then go and try to shoot for the moon, but they can only hit within the range, right? And that usually happens when the SPY tries to just break even, hit neutral, right? And that's great because if it were to do that, I would be in a really sweet spot. We're talking $500 in a day. Yeah. But for the most part, the trend is your friend. Play the trend and keep to it. All right. See you in a bit. Welcome back, team. We're currently sitting at 2:21 p.m. And so we got about a little over a half an hour before power hour comes in. Power hour being the first hour of the market open, 9:30 to 10:30, and last power hour of the actual market day. So currently the red line right here you see is the stock price, and as I mentioned before, I put that in sort of as like a top end kind of location of where the resistance level would be for the range that we're seeing. And yeah, around 1:30 to 2:15, market just kept clawing at it and just exploded upwards. So as long as we stay within this zone, we're gonna get into the sweet spot of the trade in and itself. The key is that we have to keep being range bound for sure in order for us to be able to stay with that. In a 1 minute candle, we're seeing sort of like a cool off over here, but we do have a 50 SMA and a 200 SMA cross in terms of trying to figure out whether or not this momentum is going to keep moving up. But we'll keep an eye on it, and of course there's no VWAP on here, so let me just switch to ES real quick. Yeah, and we're just above VWAP. It just exploded above VWAP. So my next assumption is that it can base off of VWAP and then bounce up from there. And yeah, that could be a potential too. So might be on the riskier side, and of course maybe potentially I should have just kept the original position on, but again, that's trading. How would you know? I'd rather lock my profits in and then just try to pivot. But again, market pivots, that position is not be able to be flexible, and that's one of the downsides of day trading options, is that if it moves against your position, but that's sort of how the cookie crumbles. So if we basically mount and then base off and then explode off of here, I'm just going to close the position, call it a scratch, and then move on from there. And then, on to the next day. And just note that if we open a position up in the morning, which we have more, statistically speaking, the better odds of being able to hold on to profits, that's probably what we'll do. And then if we're going to manage it halfway during the day and in the noon time and just lock in profits and then just walk away, that's totally fine too. So we shall see. My goal is that we lose steam right here, maybe fall down to here where VWAP would theoretically be, and just kind of chop sideways from VWAP. But with power hour coming, that means more volume could potentially be introduced, and that is definitely not a certainty. So I'll keep an eye on it, and then I'll definitely put my stop pretty much right around, at like a $50 to $100 loss, and then keep it there. But yeah, I'll keep everybody informed. How's it going, everybody? We are 3:23 p.m. We are a little over a half hour into power hour, and we are just kind of waiting for this to just sort of all play out. We just been basing around pretty much at this threshold where we are right around break even on this particular trade. So it's better to just kind of ride this one out for a certain duration, pretty much right up to 578, which I've set an alarm to. Because if it ever were to go past that level and then keep climbing, we've already gone to the point of no return on that particular point. If we pretty much have sellers show up at the last half hour, crank this sucker down to anywhere towards where the middle of the range that we've been trading at would be, that would be much appreciated, and then we'll make out on that particular trade. But that's kind of sort of the again, the risk to reward on that particular process. But overall, I would say it's not too crazy in terms of what a defined risk strategy usually nets you from a 30 to 45 day time span. The only difference is that you're doing it in an incredibly condensed time frame, and your windows of opportunities to get out and just like collect a profit are rather small. Like, there are a couple of instances from the last update to this one where I could have just walked away with like a $12 scratch, meaning like I collect $12 to just cover fees. Usually it's about $6 to $8 in TD Ameritrade Thinkorswim fees, just to cover the trade. But yeah, overall, in terms of like what we collected from the previous trade, I think it was like $40-ish, $50-ish. I think it was $40 after fees. We were pretty much break even. You can see the P&L for the day is right here. So for originally was a $500 buying power, now it's a $900 buying power to basically net somewhere around the teens is what I'm predicting. Or, let's see, the break-even point would be, what did I say, right here. So the most that I could potentially lose would be $190-ish if it were to break to that level. But yeah, you just have to keep monitoring it, set your alerts, set your stops. In this instance, I don't have to set an alert for if it were to go down. I just have to set an alert for if it were to basically retest the highs again as it's doing right now, and then see if it actually breaks through. If it fails to do so, and then sellers step in towards the very last minute, like I said before, would be happy if that were to happen. But at the end of the day, it tells me that, even during a range trade kind of situation, you still want to set your limits much more wider just to capture a better profit zone. So then that way, even though it'll reduce the overall profitability in that aspect, I think I was more ambitious about doing a specific trade that I'm typically used to. And that's kind of what you get. So we have this breakout right here. We're approaching that sort of zone where the next level, the final level, is going to be tested, and then we'll see. We've produced somewhat of a higher lows in these three segments from 230 to 330. So short-term time span, I would say yes, it's producing higher highs, higher lows, and the trend is now switched over officially to moving upwards. And right now we'll just sort of aim for the last half hour to just kind of, basically bleed off any of sort of the potential upside movement that could happen in that time period. So yeah, I'll update you in terms of sort of where's the final number and where we sort of leave off. But ultimately, the end result really won't change too much whether you just let this go in the next half hour or if you try to close the position. The difference would be is just whether or not you collect closing fees and whether or not this runs away. So it tested in that area again. See, like that wick candle right there, the little tiny stick right there? That's called a wick, like on a candle. And with that wick right there being tested on a 3-minute is an indication to me that we have resistance, we have sellers still showing up right here. Potentially on another move down, I can close this position for a scratch, is the thought process. So whether or not you have a risk appetite and you just want to kind of close out and not have to try it, or you want to just ride or die and see if the sellers show up and push the whole position down in an upset with the next 30 minutes to go, yeah, it'll be very interesting. I'll keep you posted.